Welcome to the Exit Insights podcast. The podcast is dedicated to helping business owners prepare for an exit so then they can go on and exit on their own terms. This is the Exit Insights podcast presented by Succession Plus. I'm Darryl Bates-Brownsword and I'm joined by Kevin Harrington. How are you today, Kevin?
Yeah, I'm very well, thank you. Looking forward to this one.
Yeah, well, we've done a lot of prep, and we've been doing a lot of prep over a number of years for this one because we are going to talk about the Business Insights Report and how a Business Insights Report can help you on your journey to make sure that your business will actually be exit ready, and how it's one of the key tools in preparing for that so that you can maximize the valuation and know exactly where you're going. So that's what we're going to be discussing today. Kevin, what's a Business Insights Report?
It's a report that tells a prospective buyer, in effect, what your business looks like and feels like, as well as its valuation. And I was just thinking, just as you were saying, talking there, Darryl, that if you wanted to lose some weight, you might jump on the scales.
Don't look at me like that when you say that.
If one wanted to lose some weight, you could jump on the scales and you would get a number and it would tell you how much you weigh. And where do you go from that? You go, well, I just want to weigh less. And the business valuations are a bit like that. You kind of go, well, what's my business worth? And it comes up with a number and you go, well, I'd like it to be worth a bit more than that. The Business Insights Report is an intelligent look at your business that first of all tells you how it looks today to a buyer and what the real valuation is. It also goes on to tell a business owner what their business could be worth to people in the future with certain key actions implemented. And that very key point there is an implementation plan that gets associated with it. So it's a kind of living and breathing document, and it allows you to jump on the scales again 6 months or a year down the road to see if you're making the right progress. It's not just a number, it's a report with actionable data in it.
Yeah. And the thing I like about it is that, hey, business owners are entrepreneurs. They've been building their business for a number of years. They're passionate about it. They're very close to it. And they've often got a couple of numbers in mind. They've got a number, which is a valuation number, which they go, what they believe their business is worth. And this is a number that, they wouldn't sell the business for less. So they'll often pick a number of what they think their business is worth. And they go, well, I wouldn't sell it for less than that. It's worth that to me. So for anything less than that, they're just not going to sell it. It's worth more to them to keep it, let it, and do whatever they choose. And sometimes this number is related to how much they've invested into it over the years, and it's just their belief of what it's worth. Others go, hey, look, I've got a challenge number. I want to sell my business for X amount, or I need this amount for the financial freedom. That's what I'm looking for. I'm looking for financial freedom. So one of the good things about the Business Insights Report is it identifies a gap between how a buyer would value their business today and the gap between what that valuation is and what their desired exit valuation is. So that knowing this number, you can either reset your expectations about how long before you expect to sell your business and exit, or change the time frame, or change the valuation, or change your risk profile as to how you've been running the business and what you need to do to close the gap. But now you've got an informed perspective on how the market will value your business. And we know it's not an exact number, but it's a starting point so that you can prepare and do the work. Because if you want a certain number and you're hoping someone will come and approach you unsolicited, you've got to put the work in so that there's half a chance that they'll offer you the number that you want. So it's an informed owner is a good owner to work with.
Yeah, that's a very good summary. And you talked about what entrepreneurs are like. I mean, entrepreneurs, they vary just like any other group of people, I guess. But when they started their business, most of them weren't accountants. And what I like about our Business Insights Report is we first started having a manual Business Insights Report back in 2009, and we've done thousands of them now, and they're automated, sitting on a platform. And the beauty is that the process of how the Business Insights Report is delivered, it enables people without an accountancy or financial background to get a pretty clear understanding of what's going on without having to delve into textbooks and take some open university degree or something. And that's I think the real key thing here is that this is business. This is not theory. It's getting on with business.
Yeah. Most business owners have never sold a business before. So if we can prepare a business insights report, and you said something crucial, this is not a valuation for a business. It's an education tool that helps them understand the starting points of understanding what the process is and what due diligence, what sort of questions a buyer is going to be just wanting to understand and learn about your business before they part with a big chunk of cash. So if you know what buyers are going to be looking for, you can start to prepare your business and prepare that information well in advance. So what sort of information are we talking about? We're talking about, well, how does the valuation work? Well, most businesses are valued with a combination of a profit number and a multiplier of that profit number. And the multiple, most business owners start from a point, well, I'm in industry X, so therefore the multiple is 5 or 3 or 7 or whatever it is. But then what's the profit number that's being multiplied? Is it gross profit, net profit, EBITDA, NOPAT? What's the actual number? Is it an adjusted number? Do you adjust it for the way you take your salary? Do you adjust it for unusual costs over the last couple of years? So all of these adjustments and which actual profit number is often new information to the business owners. And then what are the things that can actually influence the multiple? The multiple is just a risk that the buyers are going, well, what's the likelihood of the growth pattern or the revenue pattern continuing under new ownership? If it's a high likelihood that it's going to continue under change of ownership, then they're going to pay a higher multiple. If it's going to keep growing without much input at all, higher multiple. So these are all the factors that the owners are looking at or the buyers are looking at. So if we can inform the business owners, the current owners of the business, of all these things that the buyers look at, then they can start doing things to either build the right sort of intangible assets, extract themselves out of key roles in the business, such as sales or delivery or being on the tools. They can just build the systems and marketing machines and the talent machines to make sure that everything keeps going without them having to touch it day in, day out.
Yeah, that's good. You mentioned earlier, Darryl, about business owners without any other information might think this business owes me this much because this is how much I've done, and so on. The person buying a business also has an emotive approach to it, but on a different kind of logic. They're saying, I've got a pile of cash here. What else could I do with it? You want me to buy your business? Well, okay. What would happen if I just put my money on deposit in short or medium term investments or bonds or whatever? And what this Business Insights report shows is, or takes into account, is what else a buyer could do with their money. And that's what we need to understand to demonstrate the value of the business to the purchaser. And it becomes, if you look through the index for Business Insights report, the last one I looked at, I think was a 59 page. They can vary a little bit between different businesses, but it splits very much into the standard financials, which is great. So we've got all the profit and loss statements and balance sheets, all things the accountant might produce or your finance director might produce. And then it starts also looking at some of the softer indicators that go on in a business, which, do you have a process for this? Do you have any IP? Things that don't show on a balance sheet. And I think it's important for people to understand how we gather this information. What do we do to stick it into our system? So our process is we sit down with the business owner or owners, and we work out what they're trying to achieve. We then gather that information by getting access to the financials. Typically 3 to 5 years worth is what we're after. And that's just factual. There's no debating it, really. And then we interview the business owners and sometimes some of the people in the leadership team, if it's appropriate. And by doing that, by interviewing them separately, we get a really good feel for what a mature buyer would find out if they bothered to interview the business, if they came along with a view to buy it. And we can present it back. And even just that process is educational for a business owner when they suddenly find out, blimey, there is a gap there, or good heavens, who said that? I mean, I thought we had that covered. So even just the gathering of data can help a business owner get things more finely tuned. But when you mesh it all together through Capitalize, our platform, and produce the Business Insights report, it's holistic. It's taking a view of risk, where you are, where you're going, what a buyer will think, what else a buyer could do with their money, all in around about 60 pages.
Exactly. So you mentioned some of the data input. We're looking for financials, and we also do a bit of some fact finding, don't we, when we do this? There's about 400 data points that we actually use, that we just want to understand all of your goals, your desires, your aspirations, because there's not one way to exit a business. Finding the right way to exit a business is different for each business owner. Some owners want to just maximize the value that they can get. They want to get the biggest bang for the buck. Some have gone, yeah, but I want to look after my employees. My employees have helped me over the last 20 years. I've had a long and loyal workforce. I want to make sure that they benefit as well. How can I do that? Some just want to fade out and ease away gracefully and just gradually step away. There's all sorts of options of how business owners exit their business and the time frame that they want to take and what they're trying to achieve from it. So one of the jobs of this Business Insights report is to uncover that and go, okay, so how attractive is the business to be acquired today? How ready are the owners? What are they moving on to? Are they, if they're not ready, if they're not clear what they're moving on to, is there any way that they may subconsciously stall the deal or prevent the deal from proceeding? And do the numbers add up? Is all the governance in place? Are all the data, all the details, all the regulation, all of the good things that ensure compliance and the actual valuation itself, is that ready to give the owner financially what they're looking for in their exit process? And when you're looking at the various exits, it can be from a simple trade sale all the way to being listed on the exchange. The ways that you prepare a business for everything in between those options varies somewhat from business to business.
Yes, I think one of the fun things about the process we go through with our clients, and we'll continue to go through, is that in initial conversations, people tend to express their ambition and desire to exit in a particular way. They go trade sale, or let's say they go to say trade sale. That's quite a common one. And the Business Insights report, it doesn't matter what people have said, the Business Insights report will report the business as it might seem to an external purchaser. And one of the outcomes from this is, on top of the thing that someone wanted in the first place, which was, an actionable report with a business valuation and so on, it actually opens people's minds up to the choices they do have on exit, which is what you were talking about, Darryl. Is it going to be a strategic sale to someone? Is it going to be an employee ownership trust, management buyout, trade sale, whatever? The conversation around that becomes stimulated by the Business Insights report, and the Business Insights report supports that conversation.
Yeah. So it's more, so we're starting to see that it's so much more than just a valuation. And one of the things that I like about it is that, we've already talked about the implementation plan and the list of projects that are outputs of this report that just shows the business owner, hey, look, here's all the areas you need to work on to improve the valuation of your business. We'll talk about the last, or the page that owners always go to first in a sec, and what's included on that page. So there's a little tease, if you like. But I think what I like about it shows a pathway of going, if you've never exited a business before, here's all the things that are going to be, in terms of information, sought after. And it provides all sorts of data, like, your EBITDA number. And I touched on adjusted financials and how they need to be adjusted. And, and we won't go into all the details, but there's a whole lot of financial information that's covered, because that's the best way that you can assess and you keep score and understand the score of a business. But it also starts to highlight all the intangible assets. Do you have a marketing machine? How systemized is your business? How long do your people stay around? What's the culture of your business? And it reports on that as well. But one of the numbers that I find really interesting that we include in the report that you just don't see very often is an actual calculation of the sustainable growth rate of the business. And based on the current financials and the business model and as it is today, how much could the business grow in terms of percentage per year without requiring an injection of capital? And and the reason I think this is a really useful number is that most business owners will put together a business plan or a budget each year and they go, look, we grew by 10, 20, 30%, whatever it was last year. Let's put a budget for 20% growth this year. And they just set that target without even having any context of what is actually achievable. What if your sustainable growth rate was 35% and you're only putting a budget together for 10 or 15% each year? You're basically underperforming of what is possible with your business. Or what if it's the other way around? What if you put together a budget for next year of 40% growth and your sustainable growth rate was only 20% and you're not aware of this? You're going to start going and you go, look, on our business plan, or our P&L, our budget, here's what we have to do. Mathematically, it all adds up, but there's no indication of cash flow on there. So you've got no idea if you're going to run into cash flow problems. If you know your sustainable growth rate, then you're going to go, right, we're going to run into cash flow problems. How do we fund this? Either we reduce our growth and ambitions, or we just know in advance, we're going to need funding for this growth. And if you can do that in advance, you're going to save yourself a lot of pain.
Yeah, we talk about the Business Insights report taking the view of the value potential of a business from the buyer's perspective. There is a concept that people could adopt with a Business Insights report, that their business after a Business Insights report is going to have a new owner. It's going to be them version 2. So after they've got the Business Insights report, they are the new owner, a version 2 of themselves that is better armed and better equipped with knowledge and information about the efficiency, the effectiveness and the risk in business, that allows them to start setting new strategic objectives and also look at the operational practicality of delivering them. And for many people, I mean, you and I have seen this with some of our clients, is that their ability to start being reinvigorated by the business, by starting to enjoy it, and the team gets more invigorated because more things are making more sense. And so the business is suddenly on its toes and doing great stuff. And actually what happens then, it looks more attractive to a potential buyer.
Yeah. And it's more enjoyable to run and easier to run. And you feel more fulfilled when you know where you are financially. And if you know what the valuation is and you're on target, everything just starts to feel like you're in control and you know where you're at.
Yeah. And you referred to the page that our clients want to dive towards, and I'm rather guessing that might be the value potential, the valuation page. And
absolutely. And
so we've cunningly made sure that's not the last page anymore, which is good. But that was an evolution for other reasons. But so that people, our listeners, know what we're talking about here, the value potential page is showing the value of the business today. So it's taking a value times a multiplier and a valuation. And we can explain it, we can justify it, we can go back through all the steps in terms of normalizing financial numbers and so forth. But excitingly, what it does is it shows if you, as a business owner, were able to resolve the profit gap, what's the business worth? If you were as good as the best in your class, because we do benchmarking as well, your business would be worth more. What would that look like? And then the foundation of the business, the risk of the business, what's that looking like? If one covered the risks, what's the value? And they all go up. And the interesting thing here is that's without increasing revenue.
Yeah.
And so we're just saying, look, you run this business better. To an outsider, it's worth more money. And actually, it's worth more money to the version 2 of you when you start running it differently tomorrow. It is going to deliver more without having to increase the revenue. And the beauty of that is, if you just want to carry on running your business, you don't need 10 more vans to deliver stuff because the revenues are staying the same, but you're tidying it up and making it efficient and effective. What a great way of running a business.
Absolutely. I like the fact that we do the bit of benchmarking in there as well, and just so you got a comparison of how your business is performing compared to similar businesses around the world. Are you paying higher rents? Are you paying higher salaries? Are you paying lower salaries? Like, how does your business compare with the others out there? And, potential buyers are going to be aware of this. They're doing their research. It's good for you to know as well. And just to keep on top of the performance. And are you ticking along, or what's your planning? As we touched on before, what's your sustainable growth rate? Are you growing as fast as you could be, or are you underachieving what's possible?
Yeah, a lot of conversations inside businesses is about that our competitor stole our customer or they're undercutting us and so on. Those are they feel like factual statements when they're made. How true they always are is
Yeah,
unknown. But a bit of benchmarking, all of a sudden we've got some facts coming into it and saying,
yeah.
are our competitors better than us? Well, actually, some are better. How can we be as good as them rather than just use them as an excuse for not getting on with things?
Yeah. So this leads us to a couple of areas, and one of the options that we have available to us is to go, well, if we're going to play with a strategy, if we're going to have a look at the Business Insights report to start taking the business on the path of what's possible in terms of valuation potential, do I need to increase the revenue to get to the valuation I want? I've now got some modeling or tools that I can use to model and just see what some of the various scenarios are. And one of the things that I like to play with clients is go, look, have you determined and documented what your proposition is to your client base? Because you're solving a problem for your clients, and therefore you're structuring the solution to that problem in terms of the what it is you do to solve their problem, who the problem solution is for, where you'll find those people with that problem, and therefore how you're going to charge them to solve that problem. And that's your client proposition. But since we're thinking strategically about the business and the valuation of the business, well, it doesn't just stop at a client proposition. We'd encourage you to explore what's your employee proposition, and whether they're employees or contractors or what have you, subcontractors that are joined to your business, licensees. What's your employee, your people proposition or your talent proposition? What problem do you solve for them? Where will you find the right sort of people that are aligned to your vision and values? Um, how do you package it up, and what are the benefits? In terms of pricing and packaging, if you like, how do you pay them and reward them for being part of your team? What's your client proposition? And when you think about it in this way, you're making that mindset shift from just revenue and commodity trading your business to valuation thinking. Now, if you're going to do a proposition for your clients and for your employees, well, you probably also want to do a proposition for your investors. If you're going to bring shareholders on and take your business to the next level, whether they be shareholders or just private funders, start thinking about what's the proposition for funders? What's the problem you solve? And as Kevin said earlier, they've got a whole stack of cash that they want to invest. What's the problem you solve and makes your business proposition a good investment for them? How much are you going to charge, or how much are you going to pay for their involvement? Who are the right investors that are aligned to your vision and values? Where do you find them, and et cetera, et cetera. And so you've got a little template that we use to construct a proposition, and you may also want to do it for your suppliers. What's the proposition that I want to be in partnership with my suppliers? How do I attract the right suppliers so that they actually add value to my business? And there's an angle that I guess not many people are exploring or thinking about that makes a difference. And it just starts to get exposed when we share the Business Insights report because of all the data points and the questions that we're asking in understanding your business. Now, when you start presenting this information to a potential buyer, what impact do you think it'll make when they're comparing you to everyone else?
Yes, they're extra and extended good points around the Business Insights report and the whole process. I think in sort of heading towards wrapping up on this, I think one of the really important things to say is that we've said that this can be a start point for getting the business ready for sale and increasing its valuation and so on. In itself, it does do that because it stimulates all that conversation. All one did was get a Business Insights report. Yeah, better off. The value is there immediately. But we accompany it with an individual implementation report that talks about pretty much it's a Gantt chart that shows what you could do and when you could do it and the phasing that we would recommend which can be slid around through a workshop and discussion around it. But what are the things that need to be done? What has to happen for you to achieve that maximum valuation for your business and to have fun in your business? And that's the trigger point to making the difference. If you don't do something at the end of it, why bother starting? If you've got the appetite to make your business worth more, the Business Insights report leading into the implementation plan and talking about the execution of that plan, that's the way to success.
Yeah. And let's pull it all together. The Business Insights report is really your starting point if you're thinking about exiting your business. If you want to be sure that your business is exit ready, when you're ready to exit and the numbers are going to work for you, this is the starting point of that journey. And it's not a quick fix, because you need to improve the profitability and get your numbers and get that financial leverage and the governance and the compliance right. And they're all the quick fixes that a lot of people are doing. But if you really want to maximize the valuation of your business and achieve that valuation potential and close that gap, you need to allow a bit more time so that you can work on the intangible assets. And why do the intangible assets take a bit longer to show up and increase the valuation? Because when you're working on your business, you're working 6 to 12 months ahead of your business. So what does that mean? It means that the work and effort that you've put in today won't show up on your bottom line in your P&L until 6 or 12 months' time. And you want to show potential buyers that all of the work you've been doing shows up on your P&L, increases the revenue, the profitability of your business, and therefore it was a good initiative to do. So you want more than 1 year's results of that. So 2 or 3 years showing the work you've done is how and why building on the intangible assets will really increase the valuation of your business in terms of a higher M, and the side benefit, the booster, is the higher profitability as well.
Fine summary. Well done.
It's pulled it all together nicely. Kevin, thanks once again for sharing your exit insights with us today.
Thank you.
I hope you enjoyed this episode of the Exit Insights podcast. If you haven't already, now's a good time to subscribe and get notified of all future episodes. Now, if you're planning to exit and sell your business one day, you want to be sure that it's exit ready when you're ready to exit and with the numbers that work for you. Now, this is going to need some planning. Now, the Business Scalability Scorecard is a good place to start. Just answer a few short questions about your goals and your aspirations for your business and your succession, and you'll get a report and a score for you, your business, and your numbers. As many of our guests have already said, don't wait until it's too late. Don't wait until you're ready to sell. Start your exit planning now to make sure that you're one of the 20% of business owners who successfully exit their business.